Hello, this educational video is brought to you by the Colorado HOA Information and Resource Center. The topic of this video presentation pertains to the reserves of an HOA and it performing a financial audit. The information provided during this presentation is for educational purposes only and is not meant to provide or to be construed as legal advice. Any legal questions should be directed to your attorney. Reserves are an important financial aspect of an HOA. Reserve funds, or simply reserves, are those funds set aside by the homeowner association to pay for the replacement or repair of community property. They are also intended to be used to prevent the need for special assessments. In general, reserves are used to fund major maintenance, repair, and replacement of common elements, including limited common elements that will require major maintenance, repair, or replacement in usually more than one and quite possibly up to 20 or 30 years. Homeowner associations often utilize reserve funds in the event of large-scale maintenance or renovation projects, as well as for any costly emergency situations pertaining to the community. Reserve funds are typically managed alongside with operating funds, which typically fund the community's day-to-day expenses or recurring costs. The association's board of directors manage the reserve funds and decide how to allocate their use. If an association incurs a large expense that the reserve funds cannot cover, then homeowners may have to pay a special assessment to cover those costs. For example, when a condominium's roof needs emergency repairs, homeowners may have to contribute additional funds beyond their regular association dues. How much reserves does an association need? Funding the association's operations is one of the most important duties of an HOA board. The implications of a poorly managed reserve fund can translate into higher dues or assessments for members of a community association. In general, reserve funds are set aside for major expenditures, commonly referred to as capital projects, which are usually large-scale projects such as replacement and repair. The authority and use of reserve funds is based on community rules and regulations, bylaws, and accountability. Some examples of reserve fund use would be roof replacement, parking lot replacement, landscaping projects, replacement of a building elevator, replacement of common building siding, renovation of the clubhouse, or community pool, replacing fencing. Why does an HOA need reserve funds? An HOA's governing documents commonly obligate the HOA to maintain, operate, repair, and replace the common areas of the association. Common areas include parts of the property owned jointly by homeowners and that every owner has a right to use. The HOA's governing documents allow it the right to collect assessments from each homeowner on a regular basis in order to pay for ongoing maintenance, operation, repair, and replacement of common areas. In order to determine how much money the HOA needs, it must adopt an annual budget. That annual budget will assign a portion of the collected assessments to go into a reserve fund. The HOA determines the appropriate amount to place into this reserve fund, which amount is usually determined by a reserve study. So what is a reserve study? A reserve study is a planning tool designed to assist the association to anticipate and prepare for the property's major repair and replacement projects and expenditures. The reserve study is a budgetary planning tool that consists of two parts, the physical analysis and the financial analysis. It identifies the current status of the reserve fund and a funding plan to offset the anticipated future major common area expenditures. The reserve study can determine the remaining useful life of the physical components of the association that are required to be maintained, as well as the time frame and expenses associated with the repairs and replacement of those components. The reserve study sets out a long-term schedule of probable costs and repairs and is commonly performed by an independent professional, such as a reserve specialist, who estimates the cost and timing of repairs and replacement to common areas that are estimated to be required over the course of up to the next 20 to 30 years. A reserve study schedule will spread out the estimated cost of repairs over a time period and provide information for the HOA to collect enough in regular assessments in order to put aside those funds to cover the future needs of the association. A reserve study will need some association information in order to conduct a study. The gathering of this information will take some time, but will help a reserve study specialist down the road to create a more accurate study for the association. The gathering of information from the association for a reserve study includes the governing documents, the HOA's financial information, the age of the property, its current state and need of repairs, the amenities it provides, and the past history of common area projects and a record of those past repairs and replacements. The cost of a reserve study will be determined by many factors, some of which are the number of common areas in the community, any deferred maintenance issues, the size of the community and the number of units, and the availability of blueprints. Once the results of the reserve study have been completed, the board needs to analyze the report and provide an overview to the homeowners. Share with the homeowners any strategic directions and outline the steps the HOA will take to save money in the long run, and how having money in reserves for keeping the community looking great in years to come will increase property values, as well as reduce the need for any special assessments. The Colorado Common Interest Ownership Act, also known as Kiowa, does contain some provisions regarding HOA reserves. These can be found in Section 38, 33.3, 209.5 of the Colorado Revised Statutes. One of those provisions states, "To promote responsible governance, associations shall adopt policies, procedures, and rules and regulations concerning certain matters, such as a reserve study." Under the Kiowa law, an association is not required to undertake a reserve study. However, it must have a policy in place to address certain issues. An HOA will need a written policy when the association has a reserve study prepared for the portions of the community maintained, repaired, replaced, and improved. Whether there is a funding plan for any work recommended by the reserve study, and if so, the projected sources of funding for the work, and whether the reserve study is based on a physical analysis and financial analysis. Also, an internally conducted reserve study is sufficient. If there is a reserve fund, the association must also have a policy concerning the investment of those funds. A board has an obligation to invest and manage reserve funds in a prudent and responsible fiduciary manner. The Kiowa law has another section that discusses reserve funds and reserve studies. That is Section 38, 33.3, 303. With regard to the investment of reserve funds of the association, the officers and members of the board shall be subject to the standards set forth in Section 7, 128, 401 of the Colorado Revised Nonprofit Corporation Act. This covers the general standards of conduct for directors and officers. Provided in that act, each director shall discharge the director's duties as a director in good faith, with the care an ordinarily prudent person in a like position would exercise under similar circumstances, and in a manner the director reasonably believes to be in the best interest of the nonprofit corporation. A director is entitled to rely on information, opinions, reports, or statements, including financial statements and other financial data, if prepared or presented by legal counsel, a public accountant, or any other person as to matters the director or officer reasonably believes are within such person's professional or expert competence. An association financial audit. What is an HOA or community association audit? A financial audit is a detailed, methodical, and objective examination of accounts and all other items that support an association's financial statements. A complete audit covers the financial statements, the annual budget, bank accounts, vendor contracts, reserve account, and other transactional records. A CPA will test the financial statement accounts. The testing procedures will entail confirming operating and reserve fund balances. Another option for an HOA is an agreed-upon procedures engagement audit. This is an audit with specific areas of focus, rather than a complete audit. It is a very detailed look, but tends to be less costly and can be tailored to meet tighter budgets. At a minimum, it looks at cash receipts, cash disbursements, and vendor contracts. Another option for an HOA is a financial review. This is more of a cursory look at the financial statements, confirming that they conform to generally accepted accounting principles, also known as GAAP. The reviewer will perform analytical procedures over the financial statements and perform extensive inquiries of the association management. By performing these procedures, the reviewer can provide limited assurance that there isn't any material misstatement. So when does an HOA conduct an association audit? There are certain situations where an audit may be required or requested. Some instances when an HOA audit may be necessary include when the developer turns the association over to the homeowners. The new board of directors needs to make sure there are no unpaid bills or liabilities. Another example is to ensure that the new board or management company is starting fresh, without any concerns about prior issues, inconsistencies, or misappropriations. And finally, there may be a covenant requirement that requires an annual or periodic audit or review. At the discretion of the board, or upon requests as stated in Kiowa Section 3833.3303, the books and records of the association shall be subject to an audit, using generally accepted auditing standards, or a review, using statements on standards for accounting and review services, by an independent and qualified person selected by the board. Such person need not be a certified public accountant except in the case of an audit. A person selected to conduct a review shall have at least a basic understanding of the principles of accounting as a result of prior business experience, education above the high school level, or bona fide home study. The audit or review report shall cover the association's financial statements, which shall be prepared using generally accepted accounting principles or the cash or tax basis of accounting. An audit shall be required only when both of the following conditions are met. The association has annual revenues or expenditures of at least $250,000, and an audit is requested by the owners of at least 1/3 of the units represented by the association. With regard to a review, that shall only be required when requested by the owners of at least 1/3 of the units represented by the association. Finally, copies of an audit or review shall be made available upon request to any unit owner beginning no later than 30 days after its completion. This audit requirement, however, does not apply to certain limited expense plan communities and smaller communities that may qualify for certain exemptions under the Kiowa law, nor do they apply to timeshare communities. This has been an educational presentation from the HOA Information and Resource Center. Following this presentation, you will find a short quiz and some HOA resources. Thank you for watching.